Some people wonder why our TQQQ challenge channel has the catchphrase, "Be a multimillionaire." After watching this video from start to finish, you'll understand why our approach can be both simple and highly successful. Since our TQQQ challenge involves investing in QQQ, QLD, and TQQQ for 30 years, today I will compare cash versus SPY versus QQQ versus QLD versus TQQQ over the past 30 years, from 1994 to 2024. Let's imagine you invested $1,000 every month starting in 1994, 30 years ago. Some people might argue that you'd have lost a lot of money by 2024 due to events like the 2001 Dotcom Bubble crash, the 2008 financial crisis, the 2020 COVID-19 crash, and the 2022 bear market. They say it's safer to keep your money in cash because the stock market is too risky. But let's compare these 5 investment returns through dollar cost averaging, DCA. DCA is an investment strategy where you invest a fixed amount of money at regular intervals, regardless of market fluctuations. This approach helps reduce the impact of volatility by purchasing more shares when prices are low and fewer shares when prices are high. It's like not putting all your eggs in one basket at one time. A great way to steadily build wealth. Let's review these 5 investments. 1. Cash. We'll use Treasury bills, T-bills, to represent cash, which earns interest over 30 years. T-bill interest rates range between 1% and 5% over this period. 2. SPY. This ETF tracks the S&P 500 index, which consists of 500 of the largest publicly traded companies in the United States. SPY is the oldest ETF in the US and one of the most popular worldwide. 3. QQQ. QQQ follows the NASDAQ 100 index, which includes 100 of the largest non-financial companies on the NASDAQ, heavily weighted toward tech giants like Apple, Microsoft, and Amazon. 4. QLD. A 2x leveraged ETF that seeks to provide twice the daily performance of the NASDAQ 100 index. It's designed for investors seeking amplified returns but comes with higher risk. 5. TQQQ. This 3x leveraged ETF aims for triple the daily performance of the NASDAQ 100 index. Like QLD, TQQQ offers higher potential returns but with greater volatility and risk. These ETFs come with expense ratios: cash 0%, SPY 0.09%, QQQ 0.2%, QLD 0.95%, and TQQQ 0.84%. The expense ratios are automatically factored into the ETF's price and performance. You don't have to pay them separately. We will use real SPY prices starting from 1993. Since QQQ, QLD, and TQQQ were launched later, 1999, 2006, and 2010, respectively, we'll use simulated performance data for these 3 before their official start dates. Specifically, QQQ simulations are based on the NASDAQ 100 index's performance. As you can see below, QQQ simulation is almost identical to real QQQ price since 1999. I will turn on and off QQQ simulation so that you can see the real QQQ price overlapped with QQQ simulation. The same goes for QLD and TQQQ simulations, which are based on 2x and 3x QQQ performance, respectively. The simulations align well with the actual ETF prices after their launches, as you can see when I toggle the simulation data on and off here. Year number 0 on October 17, 1994. We started on October 15, 1994 and ended on October 14, 2024, which represents exactly 30 years as we invest in TQQQ Challenge. You can see the starting date here, with cash at $1, SPY at $1, a QQQ simulation at $1, a QLD simulation at $1, and a TQQQ simulation at $1. Then, we begin by investing $1,000 once a month for the next 30 years. Year number 1 on October 17, 1995. After investing $1,000 every month for the first 12 months, your investment returns would be as follows. Cash, $12,000. SPY, $14,000. QQQ, $15,000. QLD, $18,000. TQQQ, $22,000. To save time, we have not displayed amounts less than $1,000. Compared to cash at $12,000, you would have made $10,000 more from TQQQ after just 1 year. Year number 2 on October 17, 1996. After investing $1,000 every month for 2 years, your investment returns would be: cash, $25,000. SPY, $30,000. QQQ, $34,000. QLD, $43,000. TQQQ, $52,000. Compared to cash at $25,000, you would have made more than twice as much from TQQQ after 2 years. Year number 3 on October 17, 1997. After investing $1,000 every month for 3 years, your investment returns would be: cash, $38,000. SPY, $55,000. QQQ, $64,000. QLD, $97,000. TQQQ, $136,000. Compared to cash at $38,000, you would have made more than 3 times that amount from TQQQ after 3 years. In this rising market, QQQ, which represents the Nasdaq 100, performed better than SPY, which represents the S&P 500. Year number 4 on October 16, 1998. After investing $1,000 every month for 4 years, your investment returns would be: cash, $53,000. SPY, $75,000. QQQ, $92,000. QLD, $136,000. TQQQ, $170,000. Compared to cash at $53,000, you would have made more than 3 times that amount from TQQQ after 4 years. Year number 5 on October 18, 1999. After investing $1,000 every month for 5 years, your investment returns would be: cash, $67,000. SPY, $102,000. QQQ, $184,000. QLD, $397,000. TQQQ, $674,000. Compared to cash at $67,000, you would have made 10 times more from TQQQ after 5 years. QQQ is also 3 times higher, and QLD is 6 times higher than cash. You may wonder what was happening between 1995 and 1999. This was the time of the Internet revolution. Before the 2001 Dotcom Bubble crash, which began in early 2000, stocks kept going higher and higher. This is referred to as a melt-up. You usually see a stock market melt up before a market crash. Now, we will move on to the 2000 to 2002 Dotcom Bubble crash. Year number 6 on October 16, 2000. After investing $1,000 every month for 6 years, your investment returns would be: cash, $84,000. SPY, $125,000. QQQ, $263,000. QLD, $552,000. TQQQ, $731,000. Compared to cash at $84,000, you would have made 8 times more from TQQQ. After hitting its all-time high in March 2000, QQQ began to decline. Still, by October 2000, you would have had impressive returns from QQQ, QLD, and TQQQ. But what happens next in 2001? Year number 7 on October 16, 2001. After investing $1,000 every month for 7 years, your investment returns would be: cash, $100,000. SPY, $112,000. QQQ, $121,000. QLD, $70,000. TQQQ, $20,000. Compared to cash at $100,000, you would have only 20% of that from TQQQ after the dot-com bubble crash. The TQQQ value of $20,000 means you lost 97% of the TQQQ value from 2000, when your TQQQ was worth $731,000. In just 1 year, you would have lost $729,000 out of $731,000. Can you keep holding on to TQQQ at this point? Year number 8 on October 17, 2002. After investing $1,000 every month for 8 years, your investment returns would be: cash, $113,000. SPY, $101,000. QQQ, $90,000. QLD, $32,000. TQQQ, $8,000. Compared to cash at $113,000, you would only have 7% from TQQQ after the 2000 to 2002 dot-com bubble crash. The TQQQ value of $8,000 means you lost 99% of the TQQQ value from 2000, when your TQQQ was worth $731,000. Over 2 years, you would have lost $730,000 out of $731,000. Can you continue holding onto TQQQ and handle the psychological stress at this point? Meanwhile, SPY is only 11% lower than cash, and QQQ is only 20% lower than cash. Another leveraged ETF, QLD, is also 72% lower than cash. Year number 9 on October 17, 2003. After investing $1,000 every month for 9 years, your investment returns would be: cash, $127,000. SPY, $135,000. QQQ, $147,000. QLD, $79,000. TQQQ, $40,000. Compared to cash at $127,000, you would only have 31% of that from TQQQ. Meanwhile, SPY is already 6% higher than cash, and QQQ is 16% higher than cash. So, if you prefer less volatility and less stress, SPY and QQQ are more suitable for you than QLD and TQQQ. QLD and TQQQ would need several more years to catch up. This is due to something called volatility decay. You can watch my YouTube short video on volatility decay here. Year number 10 on October 15, 2004. After investing $1,000 every month for 10 years, your investment returns would be: cash, $140,000. SPY, $159,000. QQQ, $163,000. QLD, $90,000. TQQQ, $48,000. Compared to cash at $140,000, you would only have 34% of that from TQQQ. Meanwhile, SPY is already 14% higher than cash, and QQQ is 17% higher than cash. QLD and TQQQ would still need several more years to catch up. Year number 11 on October 17, 2005. After investing $1,000 every month for 11 years, your investment returns would be: cash, $156,000. SPY, $185,000. QQQ, $192,000. QLD, $115,000. TQQQ, $68,000. Compared to cash at $156,000, you would only have 44% of that from TQQQ. Meanwhile, SPY is already 19% higher than cash, and QQQ is 23% higher than cash. QLD and TQQQ would still need several more years to catch up. Year number 12 on October 16, 2006. After investing $1,000 every month for 12 years, your investment returns would be: cash, $176,000. SPY, $230,000. QQQ, $226,000. QLD, $143,000. TQQQ, $91,000. Compared to cash at $176,000, you would only have 52% of that from TQQQ. Meanwhile, SPY is already 31% higher than cash, and QQQ is 28% higher than cash. QLD and TQQQ would still need several more years to catch up. Year number 13 on October 16, 2007. After investing $1,000 every month for 13 years, your investment returns would be: cash, $197,000. SPY, $276,000. QQQ, $300,000. QLD, $225,000. TQQQ, $167,000. Compared to cash at $197,000, you would have only 85% from TQQQ. Meanwhile, SPY is 40% higher than cash, and QQQ is 52% higher than cash. QLD has finally surpassed cash, but TQQQ still needs several more years to catch up. However, next year, in 2008, the financial crisis is looming. Year number 14 on October 16, 2008. After investing $1,000 every month for 14 years, your investment returns would be: cash, $213,000. SPY, $180,000. QQQ, $192,000. QLD, $77,000. TQQQ, $27,000. Compared to cash at $213,000, you would have only 13% from TQQQ after the 2008 financial crisis. TQQQ has been underperforming cash for the last 7 years, since 2001. SPY, QQQ, and QLD are all below cash at this point. After 14 years of investing, you are actually losing money. Year number 15 on October 16, 2009. After investing $1,000 every month for 15 years, your investment returns would be: cash, $225,000. SPY, $229,000. QQQ, $271,000. QLD, $137,000. TQQQ, $66,000. Compared to cash at $225,000, you would have only 29% from TQQQ. Meanwhile, SPY is 2% higher than cash, and QQQ is 20% higher than cash. QLD and TQQQ still need several more years to catch up. Year number 16 on October 15, 2010. After investing $1,000 every month for 16 years, your investment returns would be: cash, $237,000. SPY, $266,000. QQQ, $343,000. QLD, $206,000. TQQQ, $119,000. Compared to cash at $237,000, you would have only 50% from TQQQ. Meanwhile, SPY is 12% higher than cash, and QQQ is 45% higher than cash. QLD and TQQQ still need more time to catch up. Year number 17 on October 17, 2011. After investing $1,000 every month for 17 years, your investment returns would be: cash, $250,000. SPY, $289,000. QQQ, $397,000. QLD, $256,000. TQQQ, $156,000. Compared to cash at $250,000, you would have only 62% from TQQQ. The recovery from the 2008 financial crisis has been slow, and TQQQ has been below cash for the last 10 years, since 2001. Meanwhile, SPY is 16% higher than cash, and QQQ is 59% higher than cash. QLD has finally surpassed cash. Year number 18 on October 15, 2012. After investing $1,000 every month for 18 years, your investment returns would be: cash, $262,000. SPY, $366,000. QQQ, $485,000. QLD, $361,000. TQQQ, $249,000. Compared to cash at $262,000, you would have 95% from TQQQ. TQQQ has been below cash for the last 11 years, since 2001. Meanwhile, SPY is 40% higher than cash, QQQ is 85% higher than cash, and QLD is 38% higher than cash. Year number 19 on October 15, 2013. After investing $1,000 every month for 19 years, your investment returns would be: cash, $274,000. SPY, $454,000. QQQ, $596,000. QLD, $520,000. TQQQ, $418,000. Compared to cash at $274,000, your TQQQ value is 53% higher. Congratulations to TQQQ investors. After 11 consecutive years of losses, you are finally profiting from TQQQ. At this time, SPY is 66% higher than cash, QQQ is 118% higher, and QLD is 90% higher than cash. Year number 20 on October 16, 2014. After investing $1,000 every month for 20 years, your investment returns would be: cash, $286,000. SPY, $520,000. QQQ, $713,000. QLD, $706,000. TQQQ, $641,000. Compared to cash at $286,000, your TQQQ value is more than twice that amount. TQQQ has finally surpassed SPY, and both QQQ and QLD are earning even more than TQQQ. Year number 21 on October 16, 2015. After investing $1,000 every month for 21 years, your investment returns would be: cash, $298,000. SPY, $592,000. QQQ, $862,000. QLD, $977,000. TQQQ, $993,000. Compared to cash at $298,000, your TQQQ value is more than 3 times that amount. Finally, TQQQ is outperforming QLD, QQQ, and SPY. QLD and QQQ values are also about 3 times higher than cash. Year number 22 on October 14, 2016. After investing $1,000 every month for 22 years, your investment returns would be: cash, $311,000. SPY, $646,000. QQQ, $958,000. QLD, $1,137,000. TQQQ, $1,185,000. Compared to cash at $311,000, your TQQQ value is almost 4 times that amount. QLD and QQQ are more than 3 times higher than cash, while SPY is more than twice the cash value. It took 22 years for TQQQ and QLD investors to reach more than $1 million. Congratulations! Year number 23 on October 16, 2017. After investing $1,000 every month for 23 years, your investment returns would be: cash, $325,000. SPY, $803,000. QQQ, $1,244,000. QLD, $1,832,000. TQQQ, $2,363,000. Compared to cash at $325,000, your TQQQ value is more than 7 times higher. Within just 1 year, you gained more than $1 million. Last year, in 2016, your TQQQ value was $1,185,000. While it took 22 years to make $1 million, it only took 1 more year to make another $1 million. That's the power of compound interest. QLD is almost 6 times higher than cash, and QQQ is nearly 4 times higher. SPY is more than twice the value of cash. Year number 24 on October 15, 2018. After investing $1,000 every month for 24 years, your investment returns would be: cash, $343,000. SPY, $891,000. QQQ, $1,462,000. QLD, $2,356,000. TQQQ, $3,253,000. Compared to cash at $343,000, your TQQQ value is more than 9 times that amount. Within another year, you made another $1 million. QLD is almost 7 times higher, and QQQ is more than 4 times higher than cash. SPY is more than twice the value of cash. The rising market continues. Year number 25 on October 15, 2019. After investing $1,000 every month for 25 years, your investment returns would be: cash, $363,000. SPY, $1,003,000. QQQ, $1,671,000. QLD, $2,797,000. TQQQ, $3,860,000. Compared to cash at $363,000, your TQQQ is almost 11 times the value of cash. QLD is almost 8 times, and QQQ is almost 5 times the value of cash. SPY is almost 3 times the value of cash. The rising market continues. Year number 26 on October 15, 2020. After investing $1,000 every month for 26 years, your investment returns would be: cash, $377,000. SPY, $1,202,000. QQQ, $2,536,000. QLD, $5,502,000. TQQQ, $8,657,000. Compared to cash at $377,000, your TQQQ is almost 23 times the value of cash. Within 1 year since 2019, you made $5 million as a TQQQ investor. Can you believe this? Despite the 2020 COVID-19 crash early in the year, the stock market rebounded significantly after quantitative easing. QLD is almost 15 times, and QQQ is almost 7 times the value of cash. SPY is 3 times the value of cash. Year number 27 on October 15, 2021. After investing $1,000 every month for 27 years, your investment returns would be: cash, $389,000. SPY, $1,578,000. QQQ, $3,261,000. QLD, $8,615,000. TQQQ, $16,064,000. Compared to cash at $389,000, your TQQQ is almost 41 times the value of cash. Within 1 year since 2020, you made more than $7 million as a TQQQ investor. This is the exponential growth you see after 20 years of investing. QLD is 22 times, and QQQ is almost 8 times the value of cash. SPY is 4 times the value of cash. You will notice the significant difference in returns between leveraged ETFs like TQQQ and QLD versus non-leveraged ETFs like QQQ and SPY in a continuously rising market. However, you will also see how vulnerable leveraged ETFs like TQQQ and QLD can be when the market downturns, especially during prolonged bear markets. And here comes the 2022 bear market. Year number 28 on October 14, 2022. After investing $1,000 every month for 28 years, your investment returns would be: cash, $406,000. SPY, $1,295,000. QQQ, $2,322,000. QLD, $3,867,000. TQQQ, $4,170,000. Compared to cash at $406,000, your TQQQ is 10 times the value of cash. Within 1 year since 2021, you lost about $12 million as a TQQQ investor. Yes, a $12 million loss in the past 12 months. This is the risk you face as a TQQQ investor. Did you consider selling TQQQ last year in 2021? Regardless, the stock market crash happened. The 2022 bear market is here. QLD is 9 times, and QQQ is 6 times the value of cash. SPY is 4 times the value of cash. Once again, we see how vulnerable leveraged ETFs like TQQQ and QLD can be when a bear market lasts more than a year, unlike the brief COVID-19 crash in 2020, which lasted only 2 months. Year number 29 on October 16, 2023. After investing $1,000 every month for 29 years, your investment returns would be: cash, $439,000. SPY, $1,617,000. QQQ, $3,336,000. QLD, $7,106,000. TQQQ, $9,442,000. Compared to cash at $439,000, your TQQQ is 22 times the value of cash. Within 1 year since the 2022 bear market ended, you made more than $5 million as a TQQQ investor. QLD is 16 times, and QQQ is 8 times the value of cash. SPY is almost 4 times the value of cash. Year number 30 on October 14, 2024. After investing $1,000 every month for 30 years, your investment returns would be: cash, $474,000. SPY, $2,210,000. QQQ, $4,545,000. QLD, $11,868,000. TQQQ, $18,899,000. Compared to cash at $474,000, your TQQQ is almost 40 times the value of cash. Within 1 year since 2023, you made more than $9 million as a TQQQ investor. Now, your TQQQ value is a staggering $19 million. Let me know in the comments what you would do if you had $19 million. QLD is 25 times, and QQQ is almost 10 times the value of cash. SPY is almost 5 times the value of cash. Congratulations! We've completed our 30-year investment journey. We just compared cash, SPY, QQQ, QLD, and TQQQ over 3 decades of investing, from October 1994 to October 2024. First, this journey demonstrates that leveraged ETFs like TQQQ and QLD can survive all major stock market crashes, including the 2001 Dotcom Bubble, the 2008 financial crisis, the 2020 COVID-19 crash, and the 2022 bear market. Second, it also shows that TQQQ and QLD can easily recover from short-term market downturns like the 2020 COVID-19 crash. However, during long-term crashes like the 2001 dot-com bubble and the 2008 financial crisis, it took several years for TQQQ and QLD to fully recover. Finally, the success of TQQQ and QLD in this 30-year journey is largely due to the use of dollar cost averaging, DCA, where we invested $1,000 every month. If you rely on lump sum investing, however, TQQQ and QLD can be far riskier. Be sure to watch the video Cash vs QQQ vs QLD vs TQQQ to see how DCA compares with lump sum investing. Just a quick reminder. This channel is for entertainment purposes only. I'm not a financial advisor. I'm sharing my personal strategy, but it's essential to develop an investment plan that fits your unique financial goals and situation. I'm excited to continue this journey with all of you. Thank you for joining me for this month's update. Don't forget to like, subscribe, and hit that notification bell so you don't miss out on future updates. Take care, and happy investing!